So chapter 11, ethics and terms of audit engagement. So in first na they say about ethics. So moral principle which governs the personal behavior is called as ethics. It is a branch of knowledge that deals with moral principles, and ethical behavior seems to be personal values and all this stuff. Okay, and it must be habit to create. This principle must impose obligation on individuals. So even these questions are not asked, but you are going to study still, just from upper. So like the auditing professions like law, medicine, uh, everything that it obeys like there's the strict code of ethics. So this is crucial for as society, government, everyone, employees, investors, everyone have trust over the chartered accountant service, and the professional ethics based on morality are vital as professional respect and confidence are there. Adhering to the ethics, self-discipline products the professional interest and commands respect. And if he must follow this code of ethics. Okay, I say as should something called as code of ethics, and if you don't follow and deviating from them will result in fines, suspension, or remove of the membership. Done. So there is two types of approaches. The first one is principle and rule based approaches. So when it comes to principle, it is just compliance with the spirit, use of professional judgment, and it is flexible, so it can be helpful in new, unusual, or rapid changing situation. And principles may be applied across national boundaries where laws may not. Clear. Next, rule based approach. So it is simple thing. It strictly follows the clearly established rules. It's like ಹೇಳಿದ್ರೆ ಮಾಡಬೇಕಷ್ಟೆ. And it lead to a narrow outlook, and spirit of ethics may be overlooked while strictly adhering to laws. मतलब तेरा spirit को you'll just ignore. It is just a narrow outlook. For the rules is somewhat rigid, and it may be not possible to deal with every practical situation relying upon the rules, and therefore it is necessary to follow that it is necessary that code of ethics to be followed. Okay, sorry, spirit of code is to be followed. Done. Fundamental principles of professional ethics: five things: integrity, objectivity, professional competence and due care, confidentiality, and the professional behavior. Integrity means it is professional accountant shall comply with the principle of integrity, which accountant should be straightforward and honest in all professional business relationship, and it should imply fair dealing and truthfulness. He should not knowingly associated with reports, returns, or communication or other information that he believes that the information may be of three things. Matlab, he should not be associated if the information are these three things. First one, it contains materially false or misleading statement. It contains statement that or information that is provided negligently or omits or obscures required information, as such omission would be misleading. So if like the professional accountant should not knowingly be associated if he believes that these things are done. It contains with reports and uh, it contains a materially false or misleading statement, contains information that may be provided negligently or omits any information. Okay, a professional accountant shall provides a modified report if such report or communication is not a breach, and well becomes aware it should be disassociated. Next one, objectivity. So shall comply with the principle of that requires accountant not to compromise with professional or business judgment because of bias, conflicts, or interest or undue influences. Okay, so objectivity matlab he should not compromise his professional or business judgment because of the bias, conflict, or interest or any other thing. The professional accountant shall not undertake a professional activity in a circumstances relation that has undue influence over professional accountant judgments or professional judgment or regarding that activity. Clear? Then professional competence and due care. The auditor shall comply with the principle of professional due care, which requires he should attain and maintain the professional knowledge and skill at the level required to ensure that the client or the employing organization receives competent professional service based on the current technical professional standards. Okay, first one. Sorry, bro. And he should act diligently in accordance with applicable technical and professional standards. Okay, he should act diligently in accordance with the professional and technical and professional standard. Maintaining competence is awareness of professional standards, and diligence include act accordance with assignment carefully and timely basis. And professional accountant shall take care of the responsible steps those working in professional or under the authority that appropriate training and supervision is there, and where appropriate, auditor shall make clients employing the organization that are aware and limitations inherent of the services. So what is confidentiality? That is like keeping it confident. Requires respect the confidentiality of information as a result of professional and business relationship. Confidentiality serves as a public interest because it facilitates free flow of information from the clients to clients or organization to accountant. So it is not it is not disclosed to the third party. It may be disclosed in three cases. It is important. The first one is when it is required by law, second when it is permitted by law and it is authorized by the client or the employer, then professional duty or right to disclose and not prohibited. Clear? 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 Then go for professional behavior. So it requires a professional accountant to comply with relevant laws and regulation and avoid any conduct that may disregard the profession. Okay, professionals shall not engage in any employment, occupation, or activity that impairs or might impair the integrity, objectivity, and good reputation of the profession. As a result, that would incompatible with the fundamental principles. Independence of the auditor. The auditor's independence safeguards. Okay, first, independence implies that the judgment of professional is person is not subordinate to the wishes or directions of a person who might take engaged on self-interest. Independence implies that the judgment of a person is not subordinate to the wishes or the direction of any other person. Okay, my judgment is not subordinate to the wishes or direction of any other person who has engaged him or his own self-interest. It is not possible to define independence precisely. Rule of professional conduct dealing with independence have framed certain objective. The rule themselves cannot create or ensure the existence of independence. Okay, so it is just independence, a condition of mind and well as personal character. It is not confused with the superficial or visible standards of independence which are sometimes imposed by law. So there is two interlinked perspective when it comes to independence of auditor. First one is independence of mind and independence of appearance. The code of ethics it issued with IFAC defines that independence of mind means the state of mind that permits the provision of opinion without being affected by the influence that compromise the professional judgment. It is just a provision of opinion without being affected by the influence that compromises the professional judgment, allowing the individual to act with IPO, that is integrity, objectivity, and professional skepticism. Next, independence of appearance is same thing, avoidance of the facts and circumstances that are so significant that a reasonable or informed third party having a knowledge of all the relevant information including the safeguards when he applied would reasonably conclude saying that the member of the assurance team, that is integrity, objectivity, and professional skepticism is compromised. And remember, he shall not only exist in fact, he shall also appear to be. And the next one is auditor's independence safeguards the auditor's ability to perform without being affected by any influences. Okay, and the independence enhances the auditor ability to act IPO, integrity, objectivity, and to maintain the attitude of professional skepticism. Then threats to independence. What will be the threats? The first one may be self-review, self-interest, self-review, advocacy, familiarity, and intimidation. Okay, self-review means just remember financial interest. If the partner or associate they could get benefit from the financial interest. That may be direct financial interest or indirect. It can be loan or guarantee. It can be undue dependence on the client's fees, close business relationship, potential employment with the client, and even the contingent fees. Self-review, that means non-audit work done by provided to a client subject to the audit. The auditor will be likely to admit his errors on his own work and not identified. He himself have provided the work. Instances where this player when the auditor having recently been director or officer of the company, and when the auditor performs services themselves are subject matter of the audit. Okay, and they were director or senior of the company, or they have performed some services, that is subject matter of the audit. Next one is advocacy. Here three things: promoting or representing or taking sides, okay, of the client. Promoting the position of the client or representing them in any other way, that could mean auditors, and taking sides with the client. So here see, if he has share of the company, in that case it is self-interest, and if he is dealing with the shares it is advocacy. And if he's dealing with the share, and if he's advocating the litigation kind of thing and all, so it may feel that for third party, third party, they may feel that his interest is reduced. And then familiarity, that same thing. Familiarity, that is a self-evident and occurs when auditor's relationship with a client is too sympathetic. Okay, this may occur in three ways: when there is close relationship with the senior working team member with a close relation of audit team working in a senior position of the client company, the former wait former partner of the audit firm being a director or senior employee of the client, long association with the specific client or counterparts, long association with a specific client or counterparts, and acceptance of some gifts, hospitality and all. Okay, from client company director or the employees. Intimidation threat, it is simply like when auditors are deterred from acting objectively with an adequate degree of professional skepticism. Okay, this may because this may happen because of three things: when the threat of replacement or disagreement with the application of accounting principle, pressure to disproportionately reduce the work in response to reduced audit fees, and being threatened with the litigation. And in these cases he has to act objectively. How to safeguard his independence? So safeguards are the action and the combination of professional accountant takes place to reduce stress, threats, and the fundamental principle to acceptably low value. So this can be this can be gone through for first for public you have public for the public to have confidence in auditing. It is essential that auditor should always appear to be independent of the entities. For the case of public, he should appear to be independent. Before taking the audit, he must something consciously consider whether it involves threat, and if the threat exists, audit should desist the task or eliminate the threat to very least, or put safeguards which reduces the threat to acceptably low level. And if all all safeguards should be recorded and can serve as a compliance with due process. And if he is unable to implement credible and adequate safeguards, then he must not take the work. Simple. Next, what is professional skepticism? As per SA 200 OIA, that is overall objective of independent audit to conduct in accordance with the standards of going concern. It says that professional skepticism is an attitude that includes questioning. Professional skepticism attitude that includes questioning mind, being alert to the conditions which may indicate possible misstatement due to fraud and error, and critical assessment of audit evidence. So it is attitude of questioning mind, being alert to the condition which may indicate possible misstatement, and critical assessment of audit evidence. This include questioning of contradictory evidence, reliability of documents, responses to inquiries, and the condition that may indicate possible fraud, and circumstances that suggest the need for audit procedures in addition to those required by SA. Okay, so checking whether audit evidence obtained by auditor is sufficient. Critical assessment means checking whether audit is as per circumstances. Why professional skepticism is required? Simple. Oh, there is a cockroach. Seriously. Simple. Maintaining professional skepticism throughout the audit is necessary to reduce the risk of overlooking unusual circumstances, overgeneralizing when drawing conclusion, using inappropriate assumption to determine the nature, timing, extent of audit procedure, and evaluating the result thereof. It is necessary to reduce the risk of overlooking unusual circumstances, overgeneralizing when drawing conclusion, using inappropriate assumptions to determine the nature, extent, and timing of the procedures, evaluating the result thereof. And further, while obtaining the reasonable assurance, the auditor is responsible for maintaining professional skepticism throughout the audit, considering the professional management override of controls, and recognizing the fact that audit procedures that are effectively detecting the fraud that may not be detecting the error may not be detecting the fraud. Further, to obtain reasonable assurance, he has to maintain professional skepticism. He has to take care of management may override the controls, or recognize the facts of audit procedures and effective in detecting error and detecting fraud. Therefore, we do agree with the statement. So auditor cannot be expected to disregard the past experience of honesty and integrity of the management and the going concern. Okay, so still he may believe that does not relieve the auditor that he need to maintain professional skepticism or allow the auditor to be satisfied with the less than persuasive audit evidence, obtaining reasonable assurance. Clear. Then go for SA 210. So it says that agreeing to the terms of audit engagement, the objective of the auditor to accept and continue the audit engagement only when the basis upon which it is to be performed has been agreed. Only when the basis upon which it is to be performed is being agreed. First thing, establishing whether it can be done through establishing whether preconditions of the audit are present or not, confirming that the common understanding between auditor and management are appropriate, or those which charge with where appropriate those charged with governance, the terms of audit engagement. Okay, there is a preconditions of audit exist, and common understanding between auditor and the management where appropriate TCWG in the terms of audit engagement. What are the preconditions of audit? In order to establish the preconditions of audit, now you should determine whether the financial reporting framework is acceptable, obtain agreement of management that it acknowledges and understands its responsibility, obtain agreement of management that it acknowledges and understands its responsibility for preparation of financial statement accordance with applicable FRF, including relevant fair representation. For such internal control or management considered necessary to enable the preparation of financial statement that are free from material misstatement due to fraud and error. So to provide audit and then provide auditor with access to all information, additional information, and unrestricted access. Okay, access to all information which management is aware and relevant for preparation of financial statement records and documentation of other matters. Additional requirements that my auditor may request from the management for the purpose of audit, and unrestricted access to the person within the entity whom determines necessary to obtain the audit evidence. So if the precondition of audit is not present, I shall discuss the matter with the management unless required by law. To do so, the auditor shall not accept the proposed audit engagement. So agreement of the audit of terms. It is important that the both auditor and client should be clear with the nature of engagement, should be reduced to writing, and auditor shall specify the scope of the work, and the audit engagement letter should be sent by the auditor to his client, and as per SA 210, I shall agree that the management of those who are charges are appropriate. And in case of partnership, now more precautions shall be taken because it forms on the partnership deed and nature of service is required, then to ensure that appropriate is valid. Contents of engagement letter we have already studied, it is already asked, so no need. Limitations of scope. If the management or those who are charged with governance has imposed a limitation on scope of the audit in terms of proposed audit engagement, in that case if auditor believes that will result in disclaiming an opinion, in that case the auditor shall not accept the limited engagement of an audit engagement unless required by law and regulation. So this one is limitation prior, okay, before itself they have imposed a limitation in terms of proposed audit engagement, and believes that these limitations will make auditor disclaim an opinion. In that case, he shall not accept the limited engagement audit and unless required by law or regulation to do so. And acceptance of change in engagement. So now they have already done, but now they are trying to change. If prior to completion of the audit engagement, the audit requesting to change the audit engagement and conveys lower level of assurance audit engagement that might convey the lower level of assurance, auditor shall determine whether there is a reasonable justification for do so. If the auditor concludes that there is reasonable justification of change in audit terms, he shall do his work as per the new terms and must issue a report as per new terms of engagement. And this report it should not include the original engagement before one or any procedure that may have performed in original engagement. And if the terms of audit engagement are changed, the auditor shall agree with the record of new terms of engagement in an engagement letter and with a suitable writing. So if the auditor should not agree to a change where there is no reasonable justification for doing so. Okay, and if auditor is unable to agree to the change of terms of audit and is not permitted by management to continue the original engagement, in that case he shall withdraw from the engagement possible under the applicable where possible under applicable law and regulation, and determine whether there is any obligation or responsibility, either contractual or otherwise, to report the circumstances third party or those who are charged with governance or the owners or the regulators. A request from client for audit to change the engagement result from these three things. First one, change in circumstances affecting the need for service, misunderstanding as to the nature of audit or relating service originally requested, and restriction to the scope of engagement, whether imposed by manager or caused by circumstances. So just read this: change in circumstances affecting for needs and all, misunderstanding in the nature, first they might have thought different, and the restriction in scope of engagement or by management or caused by circumstances, that is flood damages kind of thing. So terms of audit engagement in case of recurring audit. In case of recurring audit, they no need to send new audit engagement letter or any other written engagement to the period. However, in the situation where it is appropriate to revise the terms of audit engagement and remind the entity in existing firms. Okay, so these are the 1 2 3 4 5 6 7 8 things you have to remember. If in these 8 things now you have to like revise. Okay, you have to revise the audit report or send a new document, send a new audit report, send a new terms of engagement. First on the indication that the entities misunderstand the objectivity and scope of the audit, any revised special terms of audit engagement, any recent change in the senior management, any recent change in the significant change in the ownership, significant change in nature and size of the entity's business, any legal or regulatory requirement, or any change in financial reporting framework adopted in preparation of financial statement, or any other changes in the requirement. First one, the entity has misunderstood the objective and scope of the audit, any revised special terms of audit engagement, or a change in management, ownership, nature and size, and legal and regulatory requirement, or change in financial reporting framework, preparation of FS, and any other change. Done. So SQC1, so it says that quality control for firms that performs, it is for firm basis, okay, that performs audit, review, other assurance and related service engagement. So the firm should establish a SOQC or system of quality control that designed to provide the reasonable assurance that the firm and its personnel comply with the professional standards and legal and regulatory requirement, and report issued by the firm and engagement partners are appropriate in the circumstances. Two things they have to comply, should establish. The first one is the firm and its personnel should comply with the professional standards and legal and regulatory requirement, that the reports issued by the firm and engagement partners are appropriate in the circumstances. Okay, so there are 6 elements in the system of quality control. The first element is leadership. So it says that the firm should establish policies and procedures that are designed to create an internal culture which promises a quality as essential for performing engagement and to achieve the two objectives. The first one is which comply with professional standards and the issue report as per appropriate circumstances. Second thing, such policies and procedure require the CEO or equivalent or the firm's managing partners to assume ultimate responsibility to the system of quality control. And the third one is any person or persons assigned to operational responsibility of the quality control of the firm or CEO or management will have sufficient and appropriate experience and ability and necessary authority to assume that responsibility. First one, it should have internal culture. Then CEO should take the ultimate responsibility, and he should have sufficient experience and ability. Okay, then ethical requirement, the firm should establish the policies and procedures that provide reasonable assurance that the firm has complied with the ethical requirements, and the code establishes the fundamental principles that has been followed, that is integrity, objectivity, professional competence and due care, confidentiality, and the personal professional behavior. So such policies and procedures that enable the firm to communicate its independence and requirement with the personnel, identify and evaluate the relationship that create threats to the independence, and take appropriate action to eliminate those threats. Okay, so in case of ethical requirement, it should enable the firm to communicate the independence, identify and evaluate the relationship that create the threats, and take appropriate action to eliminate the threats. And there should exist a mechanism so that the partners or relevant client members can promptly notify the threat and independence, and all breaches of independence should be promptly notified, and appropriate action should be taken. At least annually, there should be a written confirmation from all the personnel required that they are following the requirement of code. So acceptance and continuance of audit of client relationship and specific engagement. The firm should establish a policy and procedure for acceptance of contents and client's relationship and specific engagement, designed to provide the reasonable assurance that will undertake or continue relationship engagement only where three things has to be there. It has considered the integrity of the client, and it has considered the integrity of the client and does not have the information that would lead to conclude the client lacks integrity, and is competent to perform the engagement, has capability, time and resources to do so, and comply with the ethical standards. So before acceptance, now you have to take care of these three things. The first one is considered integrity. He has to consider integrity of the kind, and whether he has to see whether competent capability, time and resources to do so is there, and whether they comply with ethical requirement. Yeah, if any issues has been identified and still the partner thinks that he has to accept or continue, in that case he has to document how they were resolved. Matters to be considered when it comes to integrity: first one, business reputation, RAO, and this much only, RAO, ML, fees, ML and CA, and reporting. First one, reputation of the owners, reputation of the principal or owners, attitude and operations of the business, and then whether it has a less fee of possible so that it can impose limitation, and whether they have involved in money laundering or criminal activities, and reason for this appointment, and non reason for the previous firm ka non appointment. Okay, the knowledge should be there, generally grow and lot of I'm sorry. And information that would have caused decline. So if there is an information that would have caused decline to the engagement, now the firms, the quality control policies must address professional and legal obligation for what they have to do in appointment of some legal authorities, like professional and legal obligation, including reporting to the person who has made the appointment, and for the legal authorities, and possibility of withdrawing from the engagement, both the engagement and the client relationship. Okay, human resources, same thing. Firms has established the policies and with reasonable assurance, and it has sufficient personnel with the capabilities, competence and commitment should be there. So while issuing while addressing personal issues, you have to take care of these things: recruitment, capability, competence, career development, profession, competence, estimation of load, this and all. So while addressing this issue, it enables the firm to ascertain the number and characteristics of the individual so that it can be used. Engagement performance, so firm has to establish a policy and procedure that would give reasonable assurance performed in accordance with professional standards and legal requirement, and for engagement partner to approve sector certificate. So through this procedure, the consistency in the quality of engagement is established, and matters to be considered to ensure the achievement of quality achievement of objective of the engagement performance. First one, how the engagement are briefed on the engagement and objectives of their work, process of complying with applicable engagement standards, processes of engagement supervision, training and coaching, methods of reviewing and work performed, appropriate documents of work performed, and keep all the policies and procedures current. So methods to be considered to ensure the achievement of objective of engagement process. Okay, for what are the matters to be addressed? The first one, whether the engagement team has briefed and objectives of their work, understand the objectives of the work, process of complying the applicable engagement standards, process of engagement system, staff training and coaching, methods of review work performed and these things, and documentation of work performed and timing extent of the review, and process to keep all the policies and procedures current. So there are some things you have to cover, that is covered in engagement performance supervision review, consultants, a difference in opinion, quality control review, and engagement documentation. First one, supervision is simple: tracking the progress of information, considering the capabilities, addressing the issues, identifying the consultation and consideration. And when it comes to review, so the more experienced team members, including the partners to review work, and less experienced team members, reviewers consider whether the work has been performed in accordance with professional standards and regulatory frameworks, significant matters have been raised or not, and appropriate consultation has been taken place. There is a need to revise the nature and timing extent of the audit procedure. The work performed are appropriately documented, evidence obtained is sufficient and appropriate, and the objectives of the engagement team have been achieved. Then when it comes to consultants, the firm should establish to reasonable assurance that the appropriate consultation takes place on difficult and contentious matter. Sufficient resources are available to appropriate consultation. The nature scope of consultation are documented, and conclusion reached are documented and implemented. Then if there is a difference in opinion, the firm should establish policies and procedures for dealing with resolving the difference of opinion within the within the engagement team, with those consulted, and where applicable between the engagement partner and the quality control review. The conclusion reached should be documented and implemented. Okay, and engagement quality control review, it is simple, says that provides objective evaluation of significant judgment made by the engagement team and the conclusion reached in formulating the accounts. And in that case now, the policies and procedures should require engagement quality control to all audit firms that are listed, all audits of financial statement of the listed entities, and some set out a criteria for other audit firms for historical financial information and other assurance related to service, and should be evaluated and determine whether the engagement should be performed. Require engagement quality control for all engagement meeting and the criteria set out by the firm. The firm's policies and procedures should require the completion of engagement quality control before the audit report has been issued. So audit documentation, so it should completely assemble the final engagement files on timely basis, and it should be maintained confidentiality, safe custody, integrity, accessibility, and retrievability, and retention period should be sufficient. Return should be made, and it should not be less than 7 years, and should document and properly it should otherwise law engagement documentation is a property of the firm and it made decisions extract this you have already stated. What is monitoring? It is a policy and procedures of the quality control system relevant, adequate, and operating effectively compliant with the practice. And like this is the other things are relevant, adequate, operating effectively, and compliant with the practice. And policies and procedures should include ongoing considerations of quality control system and periodic inspection and selection of completed engagement. Then now we are into SA 220 quality control for audit of financial statement. Okay, and here, so the quality control system policies and procedures are the responsibility of the audit firm here also. And SQC1 has the obligation to establish and maintain the SOQC to provide that reasonable assurance that the firms and its personnel comply the professional standards and legal and regulatory requirement. I have told this 100 times right now. And the report should be appropriate in any circumstances. So here there are also 6 things: leadership, relevant ethics, acceptance, continuance. These 3 are same things. Monitoring also same thing. Assessment, here there is engagement team, and here it is engagement performance. There is human resource, I guess. Yeah. Leadership quality, the engagement partner shall take the responsibility of the overall quality of the engagement and partner is assigned. The action of the engagement partner and his communication to the members should emphasis on the importance of the following in audit quality, and the fact audit quality is essential in performing the audit engagement. 2 things he has to emphasize. Okay, it'll be like karna hai, back karna hai. The importance of following in the audit quality, and the audit quality is essential in performing the audit engagement. What are the following? The first one is performing work with compliance legal and regulatory requirement as per professional standards, reports that are appropriate in circumstances. These 2 are the same things, and the firm's quality control policies and procedures are applicable, and applicability to raise the concerns without the fear. And relevant ethical requirements, same thing. Identify whether there is threat regarding audit engagement, and safeguard may not be available to eliminate or reduce to a low level. In that case, reporting to the engagement partner and determine the appropriate action may include in eliminating and create the threat and withdrawing from the where it is legally permitted. So SA 220 acceptance and continuance. The firm to obtain information before accepting engagement. Information of the following assists the engagement partner to determine the decision regarding the acceptance of continuance of the firm of the engagement. He has to determine 4 things. The first one, integrity of the principal owner, competence of the engagement and necessary and capabilities. This we already studied. Whether firm has engagement team to comply with the ethical requirement, and significant matters that have arisen during the current or previous audit and their implications on continued audit. These 2 points were same, only this one and this one is different. If the obtains information that have caused firm to decline audit engagement had available earlier, in that case he shall communicate promptly to the firm, and the firm engagement should take necessary action. And as a assignment of engagement team, simple. The engagement partner should satisfy engagement team because appropriate, competent with and not part of engagement team correctly have a appropriate, competent and capabilities to perform the audit engagement as per PSRL and appropriate opinion to be report should be given in circumstances issued. And engagement performance, so the firm should establish policy and procedures with reasonable assurance that performed with professional standards, legal and regulatory and appropriate. I'll die bro. And the engagement quality control reviewer. Okay, review the firm, the audit of the financial statement of a listed company and other audit engagement. If any of the firm determine that the quality of review is required, in this case the partner should determine that the quality reviewer has been appointed and discuss the significant matters arising during the engagement, and not to date the audit report until the completion of the engagement quality reviewer. The last one is difference. If there is any difference between engagement team, those who are consulted, and even the engagement partner and engagement quality reviewer, in that case the firm should follow the engagement team shall follow the policies and procedures dealing with and resolving the uh, difference of the opinion. Monitor is simply relevant, adequate, and operating. It should consider the results operating in latest circulated information if applicable, or the network form, whether deficiency noted in the information, and the edit form. Documentation, you have to document four things: 1, 2, 3, 4. First one, issues identified in respect of compliance with ethical requirements, conclusions on compliance with independence requirement, and audit engagement and any relevant discussion in the firm. Next, conclusion reached in regarding acceptance and continuance of client relationship, the nature and scope of conclusion resulting consultation undertaken in the course of engagement. Four things you have to document: issues in respect of compliance with the ethical requirement, conclusion in compliance of independence, conclusion reached regarding the acceptance and continuance of client relationship, and the nature scope of conclusion resulting in consultation undertaken during the course of audit engagement. Thank you.